On the 11th hour, on March the 28th, shortly before Bear Trusts were due to be filed, the CRA made an announcement that Bear Trusts for 2023 would not need to file unless they were specifically requested to do so. This is great news in that all those Bear Trusts that didn't know they were trusts are now out of harm's way, so to speak. But it is really a frustrating situation for all those taxpayers that filed early, or all the accountants that put in a significant amount of effort to try and meet this deadline. And then like minutes before the deadline, the whole situation becomes unnecessary. So anyways, just a slight update. Bear Trusts don't have to be filed for 2023. Again, still, if you're not sure about your situation, please consult an advisor and make sure you get the right advice.
Hi, and welcome to Serenity Now, a place for entrepreneurs to ask questions, learn, get connected, and be inspired. Join us as we talk about all things business and the search for the ever-elusive Serenity Now in both business and personal life.
Peggy, why should folks listen to this podcast today?
Well, they should listen to this because on the surface, one might think that you don't have any trust because you haven't gone to a lawyer and created a formal trust arrangement. But if you think you don't and you meet any of the requirements we talk about here, yeah, you do. You have a trust. You need to file a return. So talk to your advisors.
Hello and welcome everyone to another episode of Serenity Now for Entrepreneurs. I'm excited to have kind of a hot topic today, or just maybe it's not hot because you don't know about it yet. So a learning episode. We're going to talk about trust and what's new for 2023, specifically for Canada. I've got my beautiful Serenity Sisters with me today. I've got Candace. Hello.
Hello, Rita.
And Peggy.
Hi. Thank you.
And I think we're just going to kind of launch right in here. First of all, let's define what a little bit of the update is all about. And we're going to throw it to our tax expert, which is Candace, and we'll have you take it away.
So I'm going to try to keep this as simple as possible. So I'm going to preface this by saying, if you think this might apply to you, you need to talk to your accountant because this is complicated stuff. I am a tax specialist. I've studied in-depth tax and I still get baffled by it. So if you feel confused, don't sweat it. Just go talk to somebody that knows what they're doing. So we've always had trusts. You might have heard of somebody that has an estate, which is actually a trust. You might have heard of somebody that has a family trust, or they're a trust fund baby or whatever. So what you may not realize is that in our everyday lives, there's a lot of trusts that exist that we don't really understand or realize are trusts. We'll get into a number of those in our podcast today so that you have some real life examples of what those might be and how they might affect you. But essentially what's gone on is that the government has changed reporting rules so that those informal trusts or unknown trusts or unacknowledged trusts now have to file a return. And the penalties for not filing the return are quite extensive. If you listen to this and you think that one of these situations, again, might apply to you, I encourage you to go and talk to somebody that can clarify your situation for you.
The way that this came up in my mind was having heard about the requirements for the trust filings. Of course, I have a formal family trust and I had to file one. But when I read the examples, it made me think there are so many people that have Bear Trust arrangements and they have no idea that they have them. And maybe that's where we could start. Maybe we could just talk about, what is a Bear Trust arrangement? Because even though it's not laid out by a lawyer in a formal trust agreement, it still exists and it still could cause a reporting requirement for this 2023 taxation year.
So the simplest way I can explain it is that if you have an asset, so a car, a building, a bank account, a stock investment account, anything where the name on the title of that particular asset is different from the people that are expected to benefit from that asset. So the most common one that I come across that is going to probably shock a lot of people, informal in trust for account. So I have two accounts where I am joint on title with my niece and nephew. And this is because for the last 20 years or so, I've been putting money into an account. And when they turned 18, I added them to the account so that they could have access to these funds.
You're a good auntie. You're a very good auntie.
Yeah, Do you need another niece? I mean, come on.
Can I get my kids on there?
And because I wanted to retain a little bit of say in how they use these funds, because I saved this money for them so that they could have down payments for homes or pay for education. Those are my two big stipulations, is that's what the money is for. But it's their money. I don't benefit from the money. So this is actually a bare trust agreement. Informal, I don't have a legal document, but it is a bare trust agreement. Potentially, I need to file trust for these two accounts that benefit my niece and nephew and not myself, but my name is on them.
So you have to file it.
I have to file it because I am the trustee.
You're the trustee because why?
My name is on the legal title and I do not benefit from the asset. I am just taking care of it.
Okay, so another example would be my brother has his name on my mom's stuff, bank accounts, investment accounts.
If he's on there just to help take care of it, then he is a trustee.
Yeah, and in fact, she's 91. So, for estate planning purposes, he's on there for the transition.
Yeah, this is going to open up a bit of a can of worms here.
Okay, that's in a trust arrangement. What other ones? Rita, you mentioned one earlier.
A lot of families, a lot of Asian families as well, when you go in for a mortgage, sometimes there's a twofold issue. One, the banks will say, you don't qualify. And so you've got to get a cosigner or a guarantor on, like your mom or dad. And they happily do it. And then also in Asian families, they contribute to support the next generation to be able to buy a house. And so their name is on it as well. But they would never have realized now with this new 2023 changes that they now are the trustee and that it's their responsibility to now file, because the whole purpose of doing that was to support the next generation and help them get into a home. But they're not going to be benefiting as per the example or the definition that Candace just provided. If the house is sold, the money actually will go to the children, not to, the mom and dad that put their name on title. So by that definition, this is now a bare trust. And they have to have all this filed by the end of March 2024? If they are aware of the situation, yes, they are required to file by the end of March. They get a couple days grace this year because March 31st lands on a weekend, but yeah.
I know my brother has his name on my mom's, but I don't even know. Well, she might have 50,000, all the assets all together, the bank accounts and her investment accounts. What's the deal? Is there a limit?
There's a very narrow definition of assets. As long as they're under the $50,000 value, aren't required to report.
So is it individual? Like, I guess that's what Peggy's saying. Is it individual bank account,
Yeah.
or is it a combination of
Assets for the trust? So if it's one trustee and one beneficiary, it would be all the assets.
So she has, let's just say, for example, she's got a couple grand in a checking account. She's got 10 grand in a savings account, and she's got about 70 or 80,000 in this is just numbers I'm pulling from the air, in a investment account. She's over the 50,000.
She's over the 50,000. Yeah.
Okay. So he would have to report as the trustee. It's a T3 is the form, right?
It's not a form. It's actually a tax return. It is actually a formal tax return.
It's a separate return. Much like our T1s or our personal tax filings, this is a T3 for a trust. And let's just tackle this question. Is it simple enough for someone to just go ahead and file it themselves, or is this a complicated thing they're going to need a tax professional for?
Like all things when it comes to tax, I'm going to say it depends. There's penalties involved with not filing the return or not providing the required information. So, and the penalty is minimum $2,500 to a maximum of 5% of the assets.
Wow.
that could be huge?
So you might as well pay under $2,500 to your accountant instead.
Something like that, yeah.
Or take your chances and not pay a $2,500 to one or the other.
It is an information return. There shouldn't be any tax owing because there's no income. That's what a bare trust is.
That's good to know.
Right? There's no income in an actual bare trust situation. There's no income to calculate. There's no tax to calculate that. It's the provision of information. I don't want to say it's simple enough that you can provide it yourself, because if you miss something, you are potentially open to this penalty situation. So getting the right advice to make sure that you filed all the information is important. But in Canada, you are allowed to file your own tax returns. When you hire somebody to prepare your tax returns, you are still responsible for that tax return.
Right.
You are just seeking guidance, right? Essentially. So
Right. So basically, in a nutshell, I guess we've got some new rules that happened for 2023. The new rules are about bare trusts, and people will typically say, I don't have a trust.
Yeah, you do.
Yeah, you do.
That's the answer now. So you may not realize, but you may indeed have a trust. And so if I don't know about all of this stuff that we've just explained today, and I don't file by March 31, 2024, or a couple of days after, what happens then?
So there is a forgiveness rule this year for unfiled returns. If you don't do it on purpose. If they can prove that you did it on purpose, you're still subject to the penalties that I talked about before. But if you do not know and you are honestly in the dark about the fact that you have a penalty, there is a provision, but it's subjective, right?
Yes, I was going to say, who
They didn't know, right? So
yeah. So I'm still a little bit lost about what the whole intent or the why behind all of this is. They're just seeking more information.
all the situations we've been talking about are pretty average, everyday, honest, just getting on with life kind of situations. But there are people that nefariously use the fact that they don't have to report their trustee situations. Most of it is like larger and international. So there was a lot of pressure internationally to improve the transparency reporting rules in Canada in regards to taxation. Many of the G3 countries have similar reporting rules so that the governments know who the actual owners of the assets are. And because the reporting, the trust return requires all the information about the trustees and the beneficiaries as part of this filing, and because we have information sharing rules with international countries, this improves the transparency of where assets are, is what the real purpose of this was. I mean, there is also transparency at the Canadian level that obviously this improves as well. I just think that perhaps they might have not realized how extensive this situation is going to affect.
I can't believe that, I'm talking about my mom's bank account. She's, on a pension. She's got a tiny little bit of a nest egg and she's 91 years old. Is this really going to benefit the government to understand what she has in her banks? Like, really?
Well, she might be, international criminal or something. I don't know, but
is it innocent until proven guilty, or is it we're now guilty?
Yeah.
And we prove our innocence by filing this information.
There's another situation that's very common that folks may not have thought about. I own a company, and when I buy a car through my company, my bank doesn't like to finance it through my company. They want me to finance it. Car's in my name, but it's my company's car.
That's typically what the accountants will advise as well, right?
Well, up until now, that's what we advise.
Jeez Louise, that's right.
I don't advise it anymore.
So hang on. So in the past, you would have advised someone if the corporation needs a vehicle.
If it fits a set of rules, like
right.
There's
only certain instances where it's going to fit the rules to be eligible to be a business vehicle. So if it's an eligible business vehicle, the bank says, no, we want Candace to finance it. So in the past, you would say, buy the car in the company and finance it yourself and no worries.
All the documentation would be in my name, but all the monetary responsibility for that vehicle was in the company.
Right. And now you would say to people, don't bother, just expense it back to your company, right?
Well, the thing is that if the car is more than $50,000,
which everyone is, yeah.
Oh, basically that makes the company.
Oh, that's crazy. This is stuff they haven't considered. So we know there's a budget coming April 16th of this year. Do you think our government has wisened up since they proposed this legislation? Do you think that they, whatever they call those guys who petition governments all the time, do you think that they brought it up?
I think that the fact that they put in, because the original late filing and not filing exemption for the penalty was not there. That was just recently introduced. And I think the fiasco with the UHT filing, acronym underused housing tax. And so last year, there was a whole bunch of underused housing tax returns that had to be filed by affected users. And I think they got bombarded. Like, honestly, I've heard stories of people that had, bare trustee ownership of like 100 properties because they're in the realty business. And so they had to file 100 of these returns. Literally, they had to hire somebody full-time for a month to file all these returns. And I just don't think the government realized the extent of how much this bare trustee thing is used. And so what I think is all of a sudden they realized, oh my God, we're going to get hit with trust returns now that like we've been hit with UHT returns.
Right.
And so they put this exemption in the fall. They announced a change to the UHT where these affected companies and partnership that are Canadian only do not have to file the UHT. So I suspect we might see something in this budget that changes the parameters for who has to file, because I think it's just a little overreaching and a little ridiculous. Like your mom's bank account, for instance.
Yeah.
I can't see how that benefits international finance. I can't see how that benefits the government.
And, let's face it,
You're trying to use common sense, though, and logic.
You know what? My business partners say that to me all the time, but Candace, that's logical.
Well, I'm hoping for that too, Candace, because I think they probably had enough time since the beginning of the year to start to see the magnitude of this request. Because I deal with, for my shred practice, I deal with a CPA who has been bogged down by these trust returns that she's had to file. So I'm hoping that already what's come in by this time, we're 2 weeks away from the filing deadline, and I'm guessing that most of the population doesn't even know about it. I had to advise people in my family, and let's face it, most people put their names on their parents' accounts as they get older, and I don't know, it just doesn't seem.
Yeah, I can't. I feel overreach on this one and information gathering on this one. But I do want to just clarify again. So just to kind of summarize, there's been some changes. Yeah, there's been some changes as of 2023. And this now impacts probably more people than are aware, but at the end of the day, if you have an asset that you have your name on, the beneficiary of that asset is somebody other than yourself, then we need to probably have a discussion. That's as simple as we wanted to define. So if that is happening in your life for anything, please contact your accountant. That's step number one. To understand a little bit deeper, if there's a total amount of $50,000 or more, then that's when you do know you have to file something. And it is an informational filing. And again, if you're unsure, talk to Candace. See, my question is, like, specifically on that is what if, like, say, for example, Peggy's fake number that she created for her mom's, stock account, well, the stocks go up and down. And right now it's 49,000.
Right.
It's at any point in the year. Yeah. If it was above 50 at any point in the year. Yeah.
It's a really low amount.
I know.
So throughout all of 2023. So that's when you get into that. And then the people that had been asked by a banker to say, well, you don't qualify for this home, but so we need a cosigner on this. Or a family that says, hey, let me support you because that's what I want to do. Our money is for you anyways. And they put their name on there. So now they are not aware.
Can I clarify one thing? You mentioned cosigner. Cosigner on banking documents is different than a person on title, right?
Yeah.
So if you're co-signing, are you in a trust arrangement?
I don't know. And therein lies the problem.
Therein lies the problem.
It is the legal definition. I'm not a lawyer.
It's actually being defined like that. So who has to file the T3? It says here the trustees are the ones who need to file. The parent who co-signed the mortgage or opened an account for a child, or the adult who has joint ownership of a parent's account must file.
Oh my God.
However, some trust with assets under 50,000 may not be required.
But if you co-sign a loan, you may not necessarily be on title of the asset.
Correct.
But you're responsible. But you're not beneficial. But you're not beneficial, but you may be responsible. Okay,
our definition has now changed.
Wow.
If we're confused, we deal with this all day and we're confused, right?
Yeah.
Can you imagine how the average taxpayer is feeling about this legislation?
They don't even know about it, Candace. I'm going to say that right now.
They don't know. They don't.
That's why we're doing this podcast. That's why we want to bring people the awareness that if you think you don't have a trust, yeah, you do. Many situations, you make it a trust. Yeah, you do. You have a trust. T3, tax return, do it promptly, otherwise be penalized.
But if you were not aware and didn't listen to this podcast until after, April 2nd, 2024, then you were unaware. And so you will have potentially some forgiveness, but it's subjective to the person looking at it.
Oh my gosh, you guys. Big brother's come to watch over you.
I guess that's what we just talked about today.
Okay, well,
this is where we go around the room and we just share any last thoughts or, ideas or support or aha moments. I guess everything was aha, but I'll start with perhaps Peggy this time.
Yeah, I'm baffled that co-signing can put you in a trust arrangement, because for me, co-signing is a financial responsibility if someone fails, but it has been defined as such. So people think about it. That's one that just snuck in the back door, I think.
Yeah, you know what? I think the biggest thing is if you think you might, ask the questions. Unless we hear some rule changes that make this legislation more reasonable on the 16th of April, then get some advice from somebody that can interpret this for your situation.
Yeah, I guess I'm with both of you as usual. I'm completely baffled. I feel information kind of overreach. I'm not feeling so hot about this entire topic at all. The only thing I can say is, this is why we have our advisors. This is exactly why we have people like Candace in place, so that we can have these discussions. And you don't need to know and be aware of everything. That's their job. So now I'm giving it all back to Candace.
Hey.
But that's why we want to talk to somebody who's aware and knows. And even if you don't have all the answers, you can actually ask someone the right questions and get the answers that we need to be able to move things forward. So what a hot topic this definitely was today. I just wanted to say thanks, Candace. Thanks, Peggy. I don't know, maybe you might not say thank you, our audience. But why did you bring this up? Now I know, I'm aware. But thank you for joining us today on behalf of Serenity Now for Entrepreneurs, Peggy, Candace, and myself, Rita. We hope that this episode has provided you some insight, some learning perhaps. And again, if you have any questions, ask your accountant. But thank you for listening, and please share this with some entrepreneurs and maybe perhaps you might find some serenity now. Thank you, everyone.
We hope you enjoyed this episode and picked up some good tips and best practices that would benefit your entrepreneurial journey. Remember, none of the content in this podcast should be relied upon as standard legal or business advice. Always consult a professional for your specific business. You may know someone who could benefit from this podcast. Please share it with your business community, and perhaps it can give an entrepreneur some serenity now.